Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I've made it. We've made it our mission to help you guys own it. What another shit show of a day. I feel like I've been saying that every day for the last 3 weeks. What the hell, man? Nevertheless, we're going to break everything down again today. We got some interesting earnings as well. I saw somebody mention in here something to the effect of, does eBay even still exist? What do they even do? Yeah, interesting take. But before we get into any of that, guys, I just want to shout out our starting five. That is Steve King, Walter Toma, Victor Toledo, Abs R, and Ralph Vandenhoek. You guys are our starting five. Welcome to Stock Market Live, guys. It is, again, like I said, another shit show of a day. The stock market is down. The SPY right now sitting at around 422, which actually is lower than what we expected it to do. After yesterday's bounce, looked like it might have had a little bit more of some positive movement yesterday after the bounce right off of 425, which was a pretty key support. Remember, we talked about this area around 425 being that spot to certainly watch for. And yesterday it had a really nice bounce. Let's look at the 5-minute chart and we can kind of look into see, obviously this is what it's doing today. But yesterday we saw this crazy bounce off of 425. Looked like it was going to actually hold that support. And today it has not. And we are now starting to retest those lows back in late January. So that was right around 420. Now, that's not an intraday low, or I'm sorry, it's not an end of day low or closing low. This is going to close at the lowest it has closed at for the year so far. So this 420.76 was an intraday low. You guys can see that. I'll zoom in there for you a little bit. So 420.76 was the intraday low, and we are at 422 and some change on the SPY right now. So there is obviously pretty strong likelihood we're going to test those lows, and it's going to close today at the lowest it's closed all year. Some of this, I think most of it obviously is in response to what's going on with the Russia-Ukraine crisis. Obviously, we know and have talked about that quite a bit. So where do we go from here? I think, I stand by some of the theories that I've shared with you guys and kind of learning from history a little bit and kind of seeing what takes place and just continuing to sit on my hands. I'm not selling anything, of course, but looking for other areas of opportunity to potentially start nibbling at some stuff. And I think that that's really what's going to make the most sense. I mean, there's some good quality companies out there as well that have just been absolutely beaten down. There's a lot of good companies that don't make any money that are probably going to continue to go through a bit of pain. But I think that there's some really good companies out there. I mean, I'm looking at Facebook right now. If you bought Facebook 4 years ago, you'd be up around 2% right now. I mean, what are we doing? Is Metaverse really worth the same as it was? The Meta platforms really worth the same as it was 4 years ago? I mean, come on. Are we really going to have that conversation? So I don't know. I think that there's definitely a bit too much panic going on. I mean, look at this. We got this is Meta platforms right now. Look, here's the big chart here. So you can see that, we're talking about prices that we saw in 2019 and this is just mind-blowing. Did something like Facebook get ahead of itself? First of all, no, it didn't. Not when you compare it to the rest of tech. It was still cheap way up here in the 300s. Now that it's sitting down below 2, sitting at 198.64. This is actually pretty mind-blowing. Forward PE on this is around 1576. This is a growth tech stock that has a forward PE of 15 times next year's earnings. That's mind-blowing. So I think that Facebook, aka Meta Platforms, whatever the hell you want to call it, certainly looks like a really great opportunity, especially if it can hold this 198. And we kind of talked about that, potentially filling that gap that we saw back during the early parts of the pandemic. I can't even believe I'm talking about Facebook being down this low, and it's actually below 2019 levels. Pretty wild stuff, right? So there are really good opportunities out there. I think that is one of them. Palantir is another one. I'm going to actually create a video on Palantir. Kathy Wood sold Palantir, almost all of it, about 90+%, 95+% of her Palantir position within the ARK funds. And now this stock sits at $10.45. Believe it or not, Palantir is still expensive, guys. Believe it or not, Palantir is still expensive. PE is at 50. This is at a $10 billion market cap. So fundamentally, it is still expensive, but the growth potential obviously is still what a lot of people are looking at this for. I think this is the absolute worst time to sell Palantir. It's the absolute worst time to sell really anything at this point. So looking at Palantir, I think that there's certainly opportunity here. You know what Kathy Wood selling Palantir reminds me of? It reminds me of Warren Buffett buying the airlines heading into the crash of 2020. So he bought the airlines at the end of February 2020. We know what happened after that. The market bottomed at the end of March. Then he sold the airlines at the end of March, and we know what happened then, right? The airlines just went crazy. So this just goes to show that we are all human, and we all make dumb mistakes. And I think this is going to be one that Kathy Wood potentially looks back on and says that was a dumb mistake. And whether she admits that it was a dumb mistake or not remains to be seen. I'm sure she'll defend her reason till the end, much like what Warren Buffett does, defends his reasoning till the end. But the fact of the matter is that Warren Buffett lost his ass on the airlines, Delta Airlines, United Airlines, and then didn't really own up to that. Just, whatever. It's just part of my strategy. I hate that answer. Why don't you just say you fucked up? I just don't understand. I mean, I say I fuck up all the time. It happens. People make mistakes. Nobody's ever right 100% of the time in the market, ever, period. If they are, then unfollow them, please, because they're lying to you. So I'm looking at Palantir, and I think that this is looking like it's probably a really great opportunity to get into something like this. Looking at Meta, I saw who was somebody was saying, Goog, is that a buy now? Yes, we talked about Alphabet a little bit yesterday. Let's see, and it is well below the 200-day moving average. Let's take a look at this chart here. So yeah, this is down quite a bit, sitting down to 25.57. And just a reminder, they're going through a 1-for-5 split as well. So this is going to look a lot cheaper. Maybe will be a lot more attractive. I think this is a great time to buy Google. Even if you can make the argument that we're in the middle of a falling knife situation, but Google is just an unbelievable stock that is still ridiculously cheap. The growth story hasn't changed at all whatsoever. So there's not really any reason why this should be down here other than the fact that panic has set in and everybody's just running for the hills, and they really can't explain to you why. They can't give you a real clear explanation as to why that actually makes any kind of sense. Oliver Thorpe says Meta or Facebook will be good long-term as long as they have the money to diversify into lots of new stuff. It's not just the metaverse, 100%. I think, Facebook's lost its footing a little bit as far as like what they should be focusing on that makes them money. Nothing wrong with going after the metaverse, but you got to also make sure that you're still doing business as usual in the meantime. So yeah, and I think that's part of the reason why Facebook has fallen as much as it has. Nevertheless, it's still ridiculously cheap, and I think it deserves to be bought up, in my opinion. Checking in with some of you guys as well. We're going to get into some of the earnings that are coming out today, but I just wanted to check in. Raylan says thoughts and prayers to Fat Man Zoom. Yeah, he's doing good today. Came in and hung out in the studio for a little bit. It's good to see him. Yeah, so we have Clover's earnings that are today. We're going to go over that. I can't believe that stock's down at $2. Oh, man, it's crazy. Carmike says Facebook got hammered today. Yeah. Tesla's way oversold. Let's take a look at Tesla. Tesla's down in the low 8s. This is one that actually I wasn't really surprised about. Oh, I'm sorry, it's in the 7s. What am I thinking? So it just keeps going down. I just can't keep up. Tesla is officially below the 200-day moving average. We haven't seen Tesla close below that since June of last year, and really it was just barely below that. So this is well below the 200-day moving average. I would say that I think I could see Tesla coming back possibly to retest 730. I've been talking for Tesla's correction to happen long before than the overall market correction. So, Tesla's obviously a huge growth story, but, we know how far this has gotten ahead of itself. We look at the forward PE on this. It's 73 times next year's earnings. That's still ridiculous. I think that this probably does come back down a little bit more. Wouldn't surprise me if it did. Watch for this around 730. Either way, we're starting to approach those oversold levels. If it does get to 730, I think that we will be seeing potential oversold situation here on Tesla. And I would agree with you, Darren. I think that eventually this will become a buy. I'm not quite sure it's it just yet. I think we're in for a little bit more pain on this one. But nevertheless, I do think that if you have a longer term approach, then yes, I think that Tesla certainly could be a buy for you. If you guys are enjoying the stream so far, make sure you hit that thumbs up. There's 147 of you guys hanging in. And we have some earnings coming up. Eric Gledhill, I don't know if he's actually watching, but I saw he joined the Chaos Crew. Guys, if you are not part of the Chaos Crew, you can hit the join button next to subscribe and help support the channel. If you guys wouldn't mind doing that, I certainly would appreciate it. In return, you get a daily watch list from yours truly, as well as access to Discord. I do a private live stream on Thursday evenings to go over my portfolio and my investment strategy and why I'm doing the things that I'm doing. So if you guys are interested in that, I certainly would appreciate the love and support by hitting that join button next to subscribe and becoming part of the crew. Anybody who has an icon next to the name can attest to how amazing the crew is. Just a really great community to be a part of. Turk Boy, I see it. Thanks for the donation. Says, please cover skills earnings live. I'm at work. We will be covering the skills earnings live as well. As soon as they come out, I'll certainly share that with you. I love this. Yeah, it's interesting, right? Penn is the only thing green in the sea of or ocean of red, says housekeeping. It's very interesting, right? One of the big reasons is because Caesars decided to no longer offer a $500 bonus for those who joined the Caesars sports book, which certainly helps out the rest of the industry. We saw a lot of the sports gambling or sports betting platforms, especially DraftKings and Penn National. They all kind of got that boost because that's an extra cost that they don't have to incur to bring more people into their platform. It's like everybody's figuring out what we knew all along, right? Or what Dave Portnoy knew all along. And we've talked about this a lot, about how, spending that kind of money to be able to draw in a crowd is just not going to be sustainable. Finally, Caesars is seeing the light there. Is it too late for them to realize this? I think that remains to be seen, but I think so. I mean, again, I think that those who are going to come out on top are the ones that don't feel like they have to spend to grow at all costs. And DraftKings is still very much in that position. Again, I think DraftKings is going to be a merger candidate for somebody. Could be an MGM, could be a Caesars even. They all got money. Maybe a Penn, but I don't think Penn has that kind of money to be scooping up DraftKings at this point. So I think it does get consolidated into one of those. I would be very surprised if DraftKings actually continued on independently. And it would be much less shocking to see them get scooped up by one of the bigger players. So let me know what you guys think about that too. I'd be curious to see what you think about DraftKings. Is DraftKings going to remain its own thing, or is it going to get scooped up? Be curious to see what you guys think about that. 160 of you guys hanging in the house. I appreciate it. Michael Hanna asked if I'm going to be adding to the Airbnb leaps on this dip. Not yet, but I am considering getting into it very, very shortly. All right. So earnings today, we got quite a few of them. One that are most notable as we are getting into the close, we got about 15 seconds before we're officially closed for the day. We got Fubo TV, Skills. If anybody remembers old Skills, another SPAC play that got absolutely hammered. Hertz got bankrupt over the pandemic, and it's back. It's back. It's back to trading again publicly on the Nasdaq. So that's going to be an interesting one to watch. Clover, as we all know and love, is a Fat Man Zoom favorite. We got to do that one. Cover that one for Fat Man Zoom. eBay, Lemonade, Booking Holdings, Magnite, Fulgent, Live Nation. That's going to be an interesting one. Is Live Nation, I think, is going to be one to watch out for. You know, if you're not familiar with Live Nation, they actually were kind of put into not such a great light when that concert took place down in Astro World, and it was just an absolute disaster. If you guys recall, obviously didn't put them in a great, you know, wasn't good publicity, but any publicity is good publicity, I guess. LYV is a ticker there. We're going to keep an eye on that. I'd be curious to see how the reopening trades are doing. And this is going to be one that I certainly would be keeping my eye on as far as that's concerned. The stock closed today down 3%, but it's been an absolute monster since the reopening. And actually, when you look at the rest of the way, the other stocks that have corrected, this has corrected one of the ones that have corrected the least amount. Obviously didn't have a great day today, but it's been doing well otherwise. So Live Nation is going to be one to watch out for. You guys have heard me talk about how travel, I think, is going to be absolutely monstrous. And by and large, there's a lot of reopening plays that haven't really made the moves that like some of the other ones have. And I think Live Nation could be a good indicator of what we could see from the likes of, you know, some of the travel stocks, such as the cruise lines and the airliners and Airbnbs of the world. I think that that's just going to further support my bullish thesis on that. So we'll just continue to watch that. Right now, it looks like it just kind of popped up around 1.5%, but on no volume, so it doesn't look like that's anything. Okay. Great question, Vinay. I will be letting you guys know that. Let me just pull up some of the other earnings that we are watching, but that is a great question. Remind me towards the end if I don't get to it. So eBay looks like those earnings are out. The stock is now down 4.5%. Jesus. Probably not good for them. Let's take a look at Fubo. That stock is up 2.5%. Looks like it's getting some sort of movement on that one. Clover Health. Everybody forgot about that. It's down 90% from its highs. Isn't that crazy? Clover's down 90. I think it's over 90% now from its highs. Unbelievable. LMND, Lemonade. It's another popular one over the pandemic. That stock's now up 3%. Okay. And then LYV was Live Nation as well. If there's other ones you guys want me to take a look at, I'll certainly bring them up. But those are the ones that I kind of like I'm watching currently, but I'll certainly be happy to pull any of the other ones up as well. eBay looks like it has their earnings were just released based off of the reaction we're seeing. So let's go ahead and take a look at that. Yeah, stock's down now almost 5%. See if we can get some numbers on those earnings. The expected earnings per share on eBay was 99 cents. The average estimate for revenue was 2.61 billion. So that's the number to beat. And when we get the actuals in here, I'll let you know what they read. Looks like they came in at $1.05. So they beat on earnings per share. Revenue for the quarter came in at 2.6 billion. So they missed just slightly on revenue. Guidance was around $4.20 to $4.40 for the fiscal year 2022 versus consensus of around $4.50. So that's why the stock is selling off. This is a classic case of, you know, when you look at stocks, guys, and you, especially in earnings, a lot of people scratch their heads and ask, why does a stock tank after good earnings? You know, they beat their earnings per share pretty handily, actually. And so I think that, I don't even think this is why the stock is selling off. The guidance came in below what analysts were expecting, and now the stock is just cratering at this point. So it's sitting at around $50 right now, 50 and a half. It's down around 7.33%. We take a look at the daily chart, and this is so $50 even is going to be land us right around here. So now we're looking at, all right, what is going on? This is so annoying. Okay, here we go. So we're looking at $50. draw some lines of potential support where this may come down to. So there's $50 even. You can kind of see where maybe that acted as a support back here on December of 2020. So that's, quite a while ago. And then again, if it doesn't hold that, there's potential for eBay to come down even further, maybe like 47. You can see that kind of bounced off of that 47 mark before, even here back in November of 2020. And then obviously down here in September of 2020, there's a couple of areas there that you might make a case for around 47.5 for this to come down to. It looks like it's certainly on its way. The stock's now down 9.5%. Jesus. Getting absolutely punished. Absolutely punished from eBay. Checking in with a couple of other ones. Fubo. That stock's up around 1%. Let's go back to the 5-minute chart just to kind of see what it's doing. Doesn't look like it's getting a whole lot of movement. If you guys aren't familiar with Fubo, they are a company that is revolved around streaming sports primarily. It's a platform for live sports, news, entertainment content in the U.S. and in Europe. They're most notably known for streaming soccer. For those of you outside of the U.S., it's football. I guess I always try to say it's real football. It's, NFL is real football, but it's really not. You use your foot for one thing, and that's for kickoffs. Actually, football, soccer and football actually makes sense because you're actually using your feet to kick the ball around. So I can't even make that argument. But Fubo, nevertheless, I digress. The estimated earnings per share for Fubo is at 67 cents. Revenue is at 213 million. And I'm wondering if this actually gets treated like some of the other streaming services that are out there, right? Because this is a little bit of a different animal. It's live streaming. It's not like Netflix streaming, right? Or Disney Plus. The stock is moving up. It's not like a Paramount, right? And I think that there's definitely a different element here that may create, some separation between as far as competition is concerned. So I think that there's definitely a case that you can make for owning Fubo over something like a traditional streaming platform. But as soon as those earnings come out, I'll let you guys know where we're at. Looks like they are out. Looks like Fubo ended 2021 with 1.13 million total paid subscribers, up 106% year over year. My goodness, Fubo added 185,000 net subscribers in Q4. So some pretty good growth there. Stock is now up 12% after hours. Look at this. Huge move on Fubo. I mean, after it got absolutely crushed. This stock was sitting at, where was this at one point? This got crazy at one point, didn't it? Oh yeah, look at this. This got up to 62.29 was the all-time high. Unbelievable to see it sitting down here at $8.50. People getting excited about it being up to $8.50. But nevertheless, stock is moving pretty good. A lot better than eBay is. So that's a pretty decent move on them. Still waiting on earnings per share from Fubo. Let's see. Looking at earnings per share, don't have them just yet, but it looks like all the other numbers are in, or at least being passed around. Looks like the growth is really what people are excited about. The subscriber growth has been significant here, so Fubo is just continuing to ramp up. Looks like average revenue per user is up to $74.52. That's up 8% compared to 2020, which is awesome. So really nice, really good news for Fubo holders. Looks like so far. It's early, obviously, so we'll have to wait and see on that. Clover, let's see if we got any numbers on Clover yet. Nope, nothing on Clover, but I'll give you what the expectation is for Clover. Clover Health is a loss of 26 cents. Average estimated revenue is around 408 million. So we'll see where that takes us. Lemonade. Also, now that's up around 2.5%. Looks like it was up a little bit more than that at one point. Let's take a look at those numbers. They look like they might be in. Lemonade. Man, I remember people went nuts on Lemonade when that first IPO'd. You guys remember that? They went absolutely ape shit when it IPO'd. I mean, just it went crazy. This is another one that just has been absolutely hammered. It's trading at $23.50 at after hours. It was as high as $188, and that was not even that long ago. January of 2021. So a little over a year ago, it was trading that high. $2.40, or sorry, not $2.40. It's up 2.5% here after hours. And looking to get the rest of those numbers in for you guys on Lemonade. Still nothing just yet. As soon as I get those numbers, I'll share those with you guys. Snow did too. Yeah, no kidding. All right. Lots of people long on Fubo. Awesome. Hell yeah. Making some money. Making some money on Fubo. That's great. Good stuff. Live Nation. Let's see where that's at. If there's any move on Live Nation. Oops, not LYB. LY. Oop. There we go. Stock's now up 4.5%. So it looks like Live Nation has their numbers out. As I await the Lemonade numbers, let's go ahead and pull up Live Nation. So they came with a revenue of $2.7 billion in revenue. The consensus was 2.05. Holy shit. That is a beat. They also raised their full year guidance for 2022. Damn. Reopening play is back, people. It's back. So huge beat on revenue. Let's gonna try to see if I can find earnings per share. Looks like adjusted operating income was 160 million. Still nothing on earnings per share. So that it's so weird how these little nuggets of information get released. Just give me the EPS. Give me the EPS. Give me the revenue, and let's call it a day. But either way, they beat revenue handily. 2.7 billion compared to almost 2 flat is what the actual was. Wow, unbelievable. Huge move on this for Live Nation. Let's go ahead and check back with Fubo, see where we're at on that. Stock's still up 10%. Pretty nice beat on Fubo. Yeah, everybody just keeps talking about the sales on Fubo right now. Wow. I mean, the growth is what everybody's going nuts on. It's like the earnings per share doesn't matter. I guess it doesn't. So they actually ended up crushing earnings per share. They crushed expectations on revenue or on user growth, and their revenue per user is also up significantly, about 8% from the year before. So pretty good stuff out of Fubo. And just given how much this has come down, I think there's obviously opportunity here, despite I don't want anybody to get afraid of a 7% move on something that's just come down as much as it has. We're talking, this is down 90%, even where it's trading at. So you still have plenty of time to get into something like Fubo if you want to. The resistance here is around 1175. We can identify that right around here. It's around 1175 is going to be that spot to watch for a potential breakup over. I mean, even the 50-day moving average is at 1280. You can see this has been clearly oversold for some time. And so, this is just what the stock needed. Now, granted, it's still more than likely trading for reporting losses quarter after quarter. But the growth story here is what's got a lot of people excited. And that's what matters in stocks that really don't have profitability yet. If they're showing or reporting some sort of sign of profitability going into maybe this fiscal year or perhaps the year after, they have some sort of timeline on when they're actually going to start making money. That could also get investors excited. So watch for this move up above, 1150. I think it's going to be good. And I really like the way this is moving so far. What are you guys in though? What are you guys in? Let me know If any of you are in anything, I saw some folks saying that they were in Fubo. They were long on Fubo, so that's working out. Hopefully you weren't long on Fubo all the way up at $35. Hopefully that wasn't a thing for you. Let's check back in with eBay. If you guys, I talked about eBay at the beginning of the show or at the end of the close, and it's still down 11%. So we're talking $48.75. Look at this. This is the exact opposite of a boner candle. The exact opposite of a boner candle. Clover, yeah, still waiting on Clover. I don't think there's anything out on Clover yet. This is going to be one of those ones that I don't think anybody, they might not report until later. If memory serves, they probably won't report anything till like 4:30, 5 o'clock, and we might not be live for that, but I'll still give you the expectations so you have them. So yeah, I don't know what's going on there, but nothing from Clover just at the moment. And we got, let's see. So Lemonade, if you guys, we can return to Lemonade. Stock's actually now retreating. It was up a pretty decent amount. I believe around 5%, close to it. Let me see here. Still nothing on the actual earnings per share for Lemonade. That's crazy. Remember how, I mean, it's just mind blowing. There's so many people that were nuts over Lemonade, absolutely nuts. And there's like nothing I can find on it. World Cup for Fubo. Yeah, that's going to be wild. That's going to be wild. Yeah, Rudy Brown says that's a flaccid candle on eBay. Yeah, that was pretty rough on eBay. Skills, SKLZ. Yeah, those earnings look like they might be out. Let's take a look. That stock is now down 19%, as if it couldn't get any worse. Jeez, a whiz. This stock, let's take a look, was up as high as $46 a share. It is now sitting at, in after hours trading, $289. It's sitting at $289 right now, and this is looking a lot like, this is looking worse than eBay at this point. Stock got absolutely hammered. Let's go ahead and see if we can find those numbers. Revenue 109 million versus 114 expected, so missed on revenue. They came in at a loss of 25 cents versus a loss of 14 cents as expected. So those are your numbers for Skills, and that's the reason why it's tanking right now, because they missed on earnings, they missed on revenue. Unbelievable. That is a shocker for Skills. But is it? I mean, is it a shock for Skills? You're talking about the gaming industry, and you've heard on this channel where we've talked about lots of people looking to get out of the house more and travel more, do more things outside. So is gaming going to be something that's that high in demand? Now, does this deserve to be down 24% to 272? Probably not, but that's the environment we're in right now. I mean, the market cap on this is at $1.5 billion. That to me seems absolutely silly. That seems absolutely silly to me. $1.5 billion, and it's actually less than that now. So probably, I would say probably like $1 billion market cap, given the way that this has come down. So that is pretty wild for SKLZ. That is insane. Insane. Hope nobody's in that. Clover is actually up. It's up 8.5% now. So maybe those numbers are out. Let's take a look. See if Clover is out. Their expectations were a loss of 26 cents. Revenue was supposed to be around 408 is what the expectation was. Don't have those numbers just yet, but the stock spiked up here to 244 after closing the day at 201. See if I can get some numbers in here. Some people, Clover Health net loss of 187.2 million. It looks like revenue is at 432. What did I say the expectation was? 408. So they came in at 432 million. So they beat on revenue quite handily, actually. Pretty decent beat on revenue. Earnings per share probably doesn't matter at this point, just given the revenue story. And that's probably why the stock is moving up. I'd imagine their earnings per share probably beat as well. But yeah, that's the story it looks like. Looks like they beat on revenue pretty handily by about $24 million. They beat on revenue. I mean, the stock's obviously been hammered, so this is not exactly something that I probably would get too overly excited about, but just given how much this has been beaten down, I mean, it's down 95% from its highs. I mean, that's just crazy. BKNG, yeah, Booking Holdings had earnings today as well. Booking.com is probably what you're most familiar with. Take a look at Booking. Stock right now is down 0.5%. I wouldn't say it's anything crazy. Stock, but the earnings looks like they might have come out. Let's take a look, see if they have earnings numbers. Looks like revenue beat in the fourth quarter. Earnings per share, $15.83. They beat by $2.31. So the estimation was somewhere around $13. Pretty decent beat on that. Looks like they beat on revenue as well. Gross bookings were 19.01 billion versus the 7.31 billion a year ago. Wow. They made mention for Booking Holdings, despite the negative impacts on travel from the Omicron wave at the end of the fourth quarter, we delivered revenue and adjusted EBITDA results that were better than our expectations for the quarter. And that was from Glenn Fogel, the CEO of Booking. Says, I'm encouraged by the meaningful improvement in bookings, and we have been so far in the 2022. So it looks like there's a really positive impact here. Not quite sure why the move down, but it looks like it is starting to reverse a little bit here. And this doesn't come as a surprise, right? I mean, we saw earnings from Trivago, from Airbnb, from what's the other one? Expedia. And what they were reporting on as far as demand for travel and what they're expecting for the summertime. So this isn't really much of a surprise to me from what's coming, but it further supports my thesis and my conviction on Airbnb in general. You guys know that I own Airbnb. I think that owning some of the airlines certainly makes some sense. We're going to hear from Norwegian tomorrow. So I think that that's going to be an interesting one to watch for. The cruise lines, if they come in and talk about some of that as well. I think that's going to be very exciting to kind of pay attention to. I think the travel story here is still going to do well despite whatever's going on in the markets, whatever's going on geopolitically. People are going to be out traveling. I don't think it's going to matter. CRM on the first. Yeah, Salesforce, that's going to be one. All right. So Vinay asked me a really great question. I want to answer that real quick. By the way, there's about 270 of you guys in here. If you haven't hit the like button yet, I certainly would appreciate it. There's only about 67 likes. Is that right? 67 likes? No. Hit the like button, guys, if you're liking the stream so far. That's kind of surprising. Let's go ahead and take a look. Vinay had a really great question that I thought was worth answering, just in the overall market sentiment. Let me see if I can find it. There we go. So he says, is oil hedging all of your plays, or is the fear of selling affecting you? How are you managing risk? Yeah, so oil's certainly been helping the portfolio for sure. I actually ended up cashing in my marathon oil position last week, rolled it up into a higher strike price further out. And I feel really confident in oil in general, especially if things progress in Russia. Oil should go crazy. I think that $100 a barrel is just imminent at this point. So I think 115 is probably a likely scenario, especially if things progress in Russia. I mean, natural gas is probably going to continue to do well. So energy is still the place to be, in my opinion. Energy, financials, rising rate environment, Bank of America, JP Morgan, they've all pulled back significantly. And I think that that's going to be an opportunity in an environment like this. So yeah, managing risk. I'm managing risk by being in the right stuff. I'm not going to worry about setting stop losses for myself. I know that some people would gasp in horror as far as that's concerned. But for me, I'd rather just be in the right stuff. So when the bounce comes, I'm not going to sit here and try to time it because I'm terrible at timing it, and most people are. So I think for me, I'm just going to continue to be in the good quality companies that I'm in. I mean, I'm in things like Microsoft, right? I'm in Marathon Oil, so that's my energy exposure. I'm in Airbnb, so that's my exposure to the travel and the reopening play. I still have Leaps on Penn National, which also is a reopening play to the casino side of things, which we saw that was one of the few green things today as well. So certainly a portfolio saver just for the day anyway. So I'm in Microsoft, I'm in United Healthcare, I'm in Spirit Air Systems, which is a playoff of Boeing. So these are all kind of like boring stocks that your grandma, grandpa probably talk about, with the exception of a couple, right? But they're going to be the safe ones for now. And once the market moves back up, which I do think it does, I think we see a potential rally leading into, maybe the rate hikes or the next Fed meeting. I think we could see a rally there, especially if we see the SPY hold this 420 mark, which it came down to 420.35 was the low of the day, closed the day at 422.07. So, it still has potential to come down a little bit further to test those intraday lows that were earlier into the year. So around January 24th was the low. It was at 420.76. So we're testing the low here now. We could be testing it a little bit tomorrow as well. We'll just have to see how things go. But yeah, I mean, for me, that's how I'm hedging. I mean, that's how I'm managing my risk is moving through and being in the right stuff. I'm not going to be in things like a Fubo. Like I'm not going to be in it right now. I just can't justify being in something as far as Fubo is concerned when I see that Microsoft's down nearly 30%. Like I think I'd much rather be in something like a Microsoft that's down 30% than taking a chance on Fubo that could come down a little bit further. Or even Clover or SoFi for that matter. I talked about SoFi last night, and I think it's going to be a good buy, but I think it's going to be a good buy for somebody who's looking to hold on to SoFi for the long term. And I mentioned that multiple times last night. If you're in a stock that's reporting losses still, it's going to be a rough ride for you in the short term. If you're a longer term holder, then maybe it doesn't matter to you. But if you're in some of this stuff like the Rokus of the world or what have you, it's still going to be more than likely painful in the short term. It may turn itself around once people get out of their feelings on rising rates and that sort of thing, but it's still going to be rough. So I'd rather be in companies that make money, and especially companies that have been beaten down that still make money. Like I said, Microsoft. I mean, I'm looking at Google. Apple's even finally started to participate in the sell-off. You have Nvidia that's down to 223. I mean, those are good. Like, ask yourself, would you rather be in if you're seeing Nvidia get nearly, what's that, 35% down from its size, nearly cut in half, essentially. It's getting close. Let's take a look. I'm looking at Nvidia right now. The all-time high for Nvidia was at $346. It's trading at $223. And we tested the 200-day moving average on Nvidia too, by the way. So for me, like, would you much rather buy an Nvidia, or would you want to double down on something that just got way ahead of itself and it isn't making any money? It doesn't matter what it is, right? Like, would you rather be in something like Nvidia that makes a shit ton of money and they're not going anywhere? So the risk reward here is really good, especially given as much as it's come down. Yes. The answer has got to be yes. If it's not, then just have somebody else trade your money for you. Please do yourself a favor. Appreciate it, Sam Clark. Thanks for the kind words. Tesla. Yeah, I think Tesla could be something that maybe you take a look at, but that's something that's still very expensive. I'd rather buy Amazon right now or an Nvidia than Tesla. I think Tesla still has some room to come down some, just because if you just look at it, how expensive it is, fundamentally, it's still ridiculously expensive. In a bull market, Nvidia is king. It's still king. We're still in a bull market, guys. S&P is down, what, 11%, 12%? Big picture, guys, big picture. People love to throw around bull and bear markets. We're still in a correction. Yes, but it's not a bear market. Let me just give you a good visual. of what we're seeing right now. Here's a daily chart since the crash of 2020. Right? Not ready to say we're in a bear market just yet. Could we be? Potentially, but not ready to make that call. Not ready to make that call. John says, bro, come on, Tesla is not expensive. Really? In what world is Tesla not expensive? Forward PE, forward price to earnings is at 73 on Tesla. 73 times next year's earnings. That's more than Apple. That's more than Amazon. That's more than all of the FANGs by twice, by 2 times. That's 2 times more than all of the FANGs, and in some cases more than that. So Tesla's worth paying more for than something like Apple? I don't know, man. I don't think so. I think that Tesla has the ability to come down even further. And we've seen this from Tesla. The volatility on Tesla is ridiculous. I think Tesla could come down to 733, 734, that area. I think that could be a potential area where I would consider, okay, still a little pricey, but I would be willing to pay for Tesla at 730, 100%. 100%. I'm not saying that Tesla shouldn't be a buy or you can't buy it, but it's expensive, period. Hands down. Kathy Wood's buying skills right now. Oh man. Okay. And this isn't me shitting on Tesla. I love Tesla. Tesla's great. It's a great company. It's going to make a lot of people a lot of money in the future, but it's expensive, period. I don't know why my voice got so high, but it did. It's expensive. Guys, one last thing I wanted to show you real quick. Our trading bots are live, just an FYI. And I'm going to share the link in the description as well. I'll share it in the chat too. But our trading bots are live. Let's take a look at this real quick. So we have a dividend bot. This is the perfect time to be in dividends, by the way, in an environment like this. Our dividend bot is live. We've had it live for over a year now, about a year and a half, and it's done extremely well. You can see the bot return over since January 2021 has 31% returns compared to the S&P right now, which is only up around 17% since January of 2021. So you can see how the bot has done really well. And I'll go ahead and share the link with you in the description. There you have it. If you guys are interested in checking out the bot over at WeTrade HQ, aka WeTrade Labs, this is a little bit of a subsidiary of WeTrade HQ. I would encourage you guys to go check that out. It's automatic trading bot. There is no minimum account size. However, I would tell you that it probably makes sense to have a little bit of cash on you, especially if you're just going to be hanging out in dividends. But you want to outperform the stock market or outperform the S&P anyway. This is definitely one thing that I think has done it, and we've been able to prove it. There's a select few people that we decided to participate in like a beta test version of our dividend bot, and it's worked out wonderfully. They love it, and I'm super pumped about it. We have some great reviews on here too. So if you guys are interested in that, the link is in the chat. And I'll put it in the description as well if you guys are interested in checking that out. But it is a great, just a great way to diversify yourself. If you still want to trade on your own, that's fine. But this just does its own thing as well, and pretty reasonably priced, I think, as well too. So if you guys want to check that out, certainly would appreciate it. If you have any questions, don't hesitate to reach out to me as well. Find me all over social media at Own the Chaos on Twitter as well. And guys, that's going to do it for me. Tomorrow we have some more interesting earnings as well that I'll be covering live, as you guys always know. Make sure you hit that notification bell to get notified when I go live at 3:45 p.m. Eastern time tomorrow. Tomorrow's earnings are as follows. We have Alibaba in the morning, Moderna, Nikola, Norwegian Cruise Line, as I was mentioning earlier, Wayfair, DigitalOcean, Six Flags. That's going to be interesting. I know these aren't like big giant companies, right? But these are going to be ones that are going to be painting a very interesting picture. But then tomorrow afternoon, we have Coinbase, we have Etsy, we have Block or Square, we have Beyond Meat, Open Door, Zscaler, Rocket, Occidental Petroleum. Some good ones reporting tomorrow, guys. So I hope you'll tune in with me tomorrow. I'll give you my live reaction to what's going on in the markets, and that is Going to do it for me. Thanks so much for tuning in. Hit that like button on your way out the door, and I will see you tomorrow. Bye.